Tensions are rising between the US and China, and that's putting it very mildly. From tit for tat tariffs to restrictions on tech exports, the two largest economies on the planet are neck deep in what many are calling a full blown trade war. But despite all of this friction, one economic weapon, often referred to as China's nuclear option, has remained largely untouched, and that's the dumping of US Treasuries. And here's the scary part: there are new signs that China might actually be considering it. So in today's video, we're going to break all of this down as follows. Number one, what exactly is this so-called nuclear economic option that a lot of people are talking about? Number two, what kind of devastation could it cause to financial markets, including the stock market? And number three, most important of all, is it actually happening already? Is China considering it? And if so, how far could it all really go? I'm going to share my opinion on all of this in today's video. And hey guys, if you want more updates on this evolving trade war and how it might impact your own portfolio, then be sure to smash that like button and subscribe for more videos just like this to keep you in the loop. But with that said, let's go ahead and jump straight into this. Now, what even is this nuclear option that economists have recently been warning about? Well, in short, it refers to China selling off its massive holdings of US government debt, specifically US Treasury securities, which are bonds backed by the US government, where an investor like China buys these bonds, thus lending money to the US government, and in return, America promises to pay them back with interest over time, just like any other typical form of debt. And so when it comes to that debt, well, as of last year, China held about $775 billion of it, making them the second largest foreign holder, only behind Japan. Now, the fear is that if China were to rapidly dump all of those treasuries, as a maybe retaliation or an escalation to this trade war, for example, well, it could cause utter devastation, which I'll outline for you in just a second. But for this reason, many experts have always referred to a move like this to be considered something like financial warfare, or a type of nuclear option that would devastate global markets. Now, where things get interesting though, and a bit scary, is that China has been already gradually reducing these US debt holdings, with even signs and rumors of that escalating more recently this year. In fact, China's total has now fallen from over $1.3 trillion in 2013 to around $760 billion this year. That's more than a 40% drop over the past decade alone. And the fear is that it may accelerate if we don't get a de-escalation to the current trade war. In fact, rumors have already started circulating that China is doing just that. For example, billionaire venture capitalist Chamath Palihapitiya, who's known for being a former San Francisco Democrat that surprisingly switched sides to support Trump during the election, and now likely has access to, maybe some insider knowledge because of, his closer relationship with Trump now. Well, he said earlier this month that he's hearing from sources that China is dumping US treasuries in order to move rates, shift narratives, and make our treasury auctions more expensive. However, he also noted that China will not be able to sell indefinitely, which I will also touch on myself in just a second. But on top of that, we've had lots of reporting speculating the same thing, including even CNBC, who also interviewed the chief global strategist of Alpine Macro, that claims China has already begun weaponizing these holdings. Much of this speculation, by the way, also comes from the fact that bond prices have been getting wrecked lately, with yields rising sharply, some even seeing the sharpest moves in perhaps decades. Similarly, China has also asked banks to stop purchasing US dollars, which have also been in decline since the Trump tariffs were announced too. Now, unfortunately, when it comes to China's holding of US Treasuries, there is a 2-month delay on that data. So we won't have exact figures on what China may or may not be doing right now until a bit later. But if any of this happens to be true, and China is considering selling off that debt, Well, then economists think that it would be a form of economic warfare, basically striking back at the US not with missiles, but rather with markets. And what better way to really rattle the otherwise strong US economy than by quietly pulling the rug out from under its financial foundation? Again, there's multiple reports suggesting exactly that, and some believe that it's only the beginning, kind of like a warning shot before something more destabilizing happens down the road. Well, if China really is preparing to weaponize its US debt holdings, then the question now is what would be the fallout of that? And how likely is it that they would even go through with it in a much larger, more impactful way? Well, there's no question that the negative impacts would be very severe. First off, the most immediate effect would be that bond prices fall. That's what happens first. If you start dumping all of these treasuries in the market, the demand for them will absolutely crash and that'll send their prices plummeting. From there, the next effect would be that their yields rise because when bond prices go down, their yields go up. It's the same thing with like dividend stocks, for example. But again, we're only seeing some small signs of that at the moment without a big enough move here to really cause much damage quite yet. The reason why it would matter down the road, though, is because US Treasury yields are really the foundation for borrowing costs across the entire economy. And so when their yields go up, other rates tend to follow, thus sending borrowing costs soaring. Think of business loans, car loans, and just as importantly, mortgage rates, which are heavily influenced by the 10-year Treasury yield. So if those spike, you can be sure mortgage rates will follow suit. And guess what that would then cause? Well, all of a sudden, it would be much more expensive to buy a home, which not only crashes the housing market, but also slows down construction and other related industries. Not to mention that if investors see China losing confidence in US debt, and especially if any other countries follow them, well, it greatly weakens the US dollar as well, causing it to lose value against other currencies and thus making imports more expensive, which would also lead to giant inflation. So it's all connected. You have crashing in business, in purchases, in homes, lower confidence, weaker dollar, rising inflation. All of this has a snowballing effect, especially on middle class families and the consumer class, which primarily drives our economy, and thus the entire thing would really collapse. And yeah, in that scenario, by all likelihood, the stock market would crash right along with it too. Now, here's where things get interesting though, because I actually don't think that this will ultimately happen, at least not to the degree where everyone should panic. And here's why. First of all, I think it's much more likely that this has been an ongoing trend from China rather than a sudden move out of nowhere to try to collapse the global economy. Instead, I think we have plenty of evidence to suggest that China has, for many years now, been gradually selling off US debt and moving into other assets like gold and other non-dollar assets, which you can see clearly on this chart here, as a broader de-dollarization strategy in order to reduce their dependence on the US financial system, which even if they wanted to do a gigantic move now and sell everything off at once to try to cripple the US economy in like a big retaliation, well, I think it would actually end up hurting them just as badly, if not even worse than America, because a move like that would likely trigger a panic in China's own markets too. If you think you're going to crash America's economy and markets without also having the entire world lose confidence in your own country too, you're delusional. China knows that their own economy relies on not just American debt, but also on investor confidence. So if all of a sudden you completely disconnect from the world's biggest superpower in America, not to mention the wrath that you would likely incur from them, retaliating back at you too, especially under Trump, who we all know can be pretty unpredictable, well, yeah, you're likely going to scare off almost all foreign investment and will probably even be seen as the bad guys by the international community to the point where your own economy and your own markets are going to crash just as badly as the American ones. Now, you could try to argue that this wouldn't be the case, but I think it almost certainly would be, because if you're another country and suddenly you realize that, if China doesn't like your policies, they might dump all of your assets too, well, then you're not going to trust them anymore. And that's just not something that China wants right now. They've spent decades trying to prove that they're a reliable and responsible economic leader globally, despite being, pretty authoritarian communists, which even if they're not trusted already, they're not going to want to destroy whatever trust they have left and undo all of the progress that they've made, if they've made any. They're not going to want to destroy it overnight just for this. Number two, let's say they don't even sell all of that debt, but just a big chunk. Well, unless you do it very slowly and gradually over time, which is more my prediction, but instead you do like a giant chunk out of nowhere, even a smaller move like that would still destroy the value of the rest of the treasuries that you hold on to, which obviously is not a good thing for them to see their treasuries go down in value. It's like trying to sell a bunch of houses during a housing market crash that you yourself created. If you own tons of houses, you don't want to cause a housing crash. You want values to go up. And number three, it would even weaken their own currency too, the Chinese yuan. Why? Well, because China actually uses dollars to stabilize the yuan's value against other currencies. So if they dump treasuries, they reduce those foreign reserves, which in turn weakens their ability to support the yuan in currency markets. And the result of that would be a drop in yuan value, making imports more expensive. It would cause capital flight. Investors would move out of the country, out of China, and it would ultimately mean more inflation at home for their own consumer base too, which would already be struggling during an economic slowdown. So ultimately, I just don't think it would be worth it for them to go nuclear like this, because it would cause panic in their own markets, huge financial losses on their own treasury portfolio, a weaker yuan with rising inflation, and an overall loss of trust in the global investment and economic community. But in summary, what we do know is that at the very least, China has shown signs of gradually divesting away from US Treasuries. And over time, that can have significant implications for global finance. And while a sudden giant dump looks extremely unlikely to me, it is still something to watch and be aware of as investors. Hence why I always preach a long-term diversified approach to investing, while also being cautious when necessary and alert and aware of everything going on in the macro economy too. That doesn't mean you should panic. In fact, I preach the complete opposite of that. And even this year, with all the volatility in the stock market, I still think it'll ultimately have been all a great buying opportunity for the long term. Because even though there are concerns, the American markets still look like the most reliable ones to me to be optimistic for in the future. But hey, all of this is just my own opinion. So you got to do your own research and make your own decisions. But I'd love to hear what you all think down below in the comment section. Give me your thoughts. I'd love to hear them. We can have a conversation. But I hope you enjoyed this video, and I will catch you in the next one very soon. All right, take care, my friends. Bye-bye.